When we talk about brand loyalty, one name that immediately pops up in our head is Titan. Titan is India's most successful consumer brand. It has successfully built great brands and products in the Indian market and segments which is largely underpenetrated, underserved and underorganized. Hello and welcome to the fourth episode of the series on fundamental analysis. As usual, we will first start with the qualitative analysis where we will discuss about Titan and its brand. We will also discuss about the competitive strength and then finally discuss about the future scope of Titan company. Then we will talk about the quantitative aspect where we will discuss about the ratios like growth ratios, profitability ratios, leverage ratios and management efficiency ratios. Based on the analysis, we will give a score to Titan and finally decide if Titan is a fundamentally strong company or not. Finally, we will do a valuation analysis to decide whether Titan is undervalued, overvalued or fairly valued. Titan was established in 1984 as a joint venture between Tata Group and Tamil Nadu Industrial Development Corporation. Its primary goal was to create world-class watches for every Indian. In 3 decades, Titan has built an impressive business where it has become the largest manufacturer of watches in India and one of the largest integrated watch manufacturers in the world. Titan has over 15 lifestyle and aspirational brand and a pan-India reach with 12,000 plus customer touchpoints. After watches, Titan entered into jewelry business in 1995. Jewelry in India is sold through exclusive company-controlled retail chain comprising owned and franchisee outlet. After watches and jewelries, Titan forayed into eyewear business in 2007 with a range of precision eyewears, sunglasses, contact lenses and frames. If we talk about some of the top brands of Titan, then it includes brands like Tanishq, which is India's leading jewelry brand, Titan, which is company's flagship brand, Raga, which is women's exclusive watch brand, Fastrack, which is India's largest youth brand, Sonata, which is India's largest selling watch brand, and Titan Eye Plus, which is India's largest optical retail chain. Let's talk about the business segment of Titan. The first business segment is the jewelry business. In jewelry business, Titan's flagship brand Tanishq is the market leader. Apart from Tanishq, Titan has also got a brand in jewelry segment with the name Zoya, which is more of a luxury brand. Titan has also got a brand called Mia, which is a sub-brand of Tanishq for young women. This jewelry business has also got an e-commerce platform with the brand name Carrot Lane. Titan's second business segment is watches. Titan is at second position in the wearable market in India. Titan continues to invest in tech-enabled wearables to stay relevant and cater to the young audience. If we talk about some of the common brands of Titan in watch segment, it includes brands like Titan, Octane, Sonata, Nebula, Raga, etc. In 2018-19, Titan's overall revenue was 19,070 crore, out of which jewelry business contributed 16,030 crore, which is almost 84% of its total revenue. This is followed with watches, which contributed 2,441 crore, which is almost 12.8% of its total revenue. The rest of the revenue was from eyewear, perfume and sari business. If we talk about the profits, jewelry business contributed 92.2% in the overall profit. This is followed with watches with 15% of overall profit. The rest of the category including eyewear, fragrance and sari were in negative, mainly because these categories are in nascent stage and Titan is pumping a lot of money in their brand building exercise. Overall, on the company and its brand value, I would rate Titan 10 out of 10. Now let's talk about the competitive strength of Titan. The biggest competitive strength of Titan is its brand value. Titan is India's most successful consumer brand. Next competitive strength of Titan is its innovation in new design and development. For example, company is building customized lenses with 3D visual mapping and creating a lot of differentiated jewelry collections. Next competitive strength of Titan is its exceptional customer experience. Next strength of Titan is its enhanced penetration and a pan-India presence. Final competitive strength of Titan is its affordable price point at great value. If we talk about the competitors of Titan, then there is no direct competitor, but there are competitors in various business categories. If we talk about competitors in watch business, then it includes companies like Casio, Citizen, Timex, Omega and Taguer. Overall, looking at the competitive strength, I would rate Titan 9 out of 10. Now let's talk about the future outlook of Titan. Since Titan operates in non-essentials and luxury category, it would be badly impacted due to coronavirus and Titan would take few quarters to recover. Hence the near-term future for next 1 or 2 years looks very weak. Now let's talk about the long-term future prospect. According to a research, the consumer spending in India is going to grow at a very fast rate. Fueled with growth in income, India is set to become world's third largest consumer market after US and China by 2030. The upper middle class and high income segment is expected to grow from 1 out of 4 at current level to 1 out of 2 by 2030. Titan is looking to touch 50 million consumers by 2023, generating a revenue of 50,000 crore in uniform consumer price. If we talk about the jewelry segment in India, it is expected to grow at a very fast rate. Titan is banking on rupees 3 lakh crore opportunity in the Indian jewelry market. If we talk about the future of watch business, Titan is strengthening its smartwatch category with number of new launches. It is also increasing its R&D spend to launch smart and tech-enabled wearables at a much affordable price point. If we talk about the future of eyewear business, Titan is the largest player of India's 6,500 crore eyewear market. In parallel, business like perfume and sari has got high growth potential as they are largely underpenetrated in India. If we talk about the long-term prospect, the opportunity with Titan is immense. They can even extend their product portfolio and foray into segments like cosmetics, which is again a very profitable business. Overall, if you look at the short-term growth prospect, it is looking weak for next 1 or 2 years. But if you look at the long-term growth prospect, it is looking great. Hence, I would rate Titan 9 out of 10 in growth prospect. Now let's talk about the quantitative aspect of company. If you look at the chart on the screen, Titan has grown at a very fast rate. Over the past 10-12 years, Titan has grown almost 7 times in revenue from the level of 3,000 crore in 2008 to 21,200 crore at current level. If we talk about the profit growth, Titan has grown 10 times in last 12 years from the level of 148 crore in March 2008 to almost 1500 crore at current level. Now if we talk about the compound sales growth in last 10 years, Titan has grown at a rate of 17.6%. If we talk about the compound profit growth in last 10 years, Titan has grown at the rate of 23%. Overall on profit growth, I would rate Titan 10 out of 10. Now let's talk about the profitability of the company. First, let's discuss the operating profit and operating profit margin. If you look at the operating profit in last 12 years, it has grown almost 10 times from level of 230 crore in 2008 to 2300 crore at current level. Titan is consistently maintaining a net profit margin of 10 to 11%. Now let's talk about the return on equity and return on capital employed. Return on equity is nothing but the total return shareholder have got on their investment. And return on capital employed is nothing but the return on the overall capital employed including debt and equity. Both these parameters are very important to gauge the profitability of business, and any business with both ROE and ROCE more than 20% is a great business. If you look at the Titan's ROE and ROCE, you can see over the years it is consistently well above 20%. In fact, if you look at the ROCE, it is well above 30% over the last few years. So looking at the overall profitability, I would rate Titan 10 on 10. Now let's talk about the leverage ratio of Titan, which essentially means how Titan is managing its short and long-term debt obligations. The debt to equity ratio is 0.39, which is very low, and it means Titan can easily pay its both the long-term and short-term debts. So looking at the leverage ratio, I would rate Titan 10 on 10. Now let's talk about the management efficiency. It is a very important aspect to run a business. Now let's look at the debtors day. What is debtors day? It is the time the debtors take to repay the money. If you look at the Titan's debtors day, it is well below 10 days, which means Titan is getting its money from the debtor at a very quick rate, which is great for a business. If you look at the Titan's inventory turnover, it is almost at 3, which means Titan is able to churn its inventory 3 times in a year, or we can say that Titan is able to churn its inventory almost every 4 months. Overall, looking at the management efficiency ratios, I would rate Titan 9 on 10. Now if we add all the scores from qualitative and quantitative analysis, Titan's score is 66 out of 70. It means Titan is a fundamentally super strong company. Now let's do the valuation analysis and see if Titan is overvalued, undervalued or fairly valued. If we quickly look at the share price movement of Titan over the long term, you can see that it was almost at the level of rupees 12 in April 2005 and currently it is at the level of 838. So this is more than 70 times growth over the last 12-15 years. It has been a great example of multi-bagger return. Over the past 15-20 years, Titan has grown at a very consistent growth rate. Now let's analyze the last 1 year price movement of Titan. So you can see over the last 1 year, Titan has fallen from its peak of 1300 plus, and that is mainly happened in last 2-3 months after the corona event. So this graph clearly shows that Titan has been doing great over the years, but the recent fall is mainly due to coronavirus. Now let's look at the price to earning ratio of Titan. If you look at the 1 year price to earning ratio, Titan's median price to earning ratio for 1 year has been 71. But the current price to earning ratio of Titan is 50. So Titan is currently trading at much lower PE ratio than its median of 70. And if you look at the fall in PE ratio, it has mainly happened after the corona event. Even if you look at the 5-year PE ratio, the median is 61 and currently it is trading at the level of 50. So Titan is trading at lower than the PE median of last 5 years. And there are very few incidents in the past where Titan has fallen below its median PE. So one thing is very clear that there is no problem with the fundamentals of the company. Titan's share price has fallen mainly because of coronavirus. So overall at current valuation, I would rate Titan as 7 out of 10, which makes it an undervalued company. But looking at the short-term future prospect, there are chances that Titan share can fall even further, which will make it even undervalued. Hello friends, in this video we did the fundamental analysis of Titan. Please note that this video is only from education purpose, and before investment please take advice from your financial advisor. If you like this video, give it a thumbs up and share it with your friends and family, and don't forget to subscribe to my channel.